Pablo, good to see you. How you doing? How you been? How's things, Pablo? First one, as always. JP, good to see you as well. Evening, how you doing? Just trying to pin the live. There we go. Evening, Miles and CMF. Jason, good to see you. How you doing? Happy Pisces, good to see you. How you doing? Paul, good to see you. How you doing? How you been? Hi, Miles. How's things? Autistic, good to see you. How you doing? Things are great. Good to see you as well. Good evening, Miles and CMF. Free forever. Good to see you. How you doing? Good evening, Professor Miles and the rest of the family. Let's go funky. Good to see you. How you doing? How are you, bro? I'm doing great. How you been? Hi, Miles. Yeah, blood. Good to see you as well. Long time. How you been? Sorry about yesterday's live show. There was a bit of a technical issue going on. I wasn't able to go live. I don't know what was happening, but everything's back to normal. Is all that matters. And a few things have been happening since yesterday, which we're going to go through on tonight's live. Good day, Miles. Mike, good to see you as well. How you doing? How you been? Morning, Miles and CMF. Shelly, good to see you all morning. How you doing? Good evening, Miles and the CMF group. Good to see you again, Miles. Good to see you as well, Carlos. How you doing? How you been? Hi, Miles. Hope you've got more great news for us tonight, mate. I always do. Good to see you, Adi. How you doing? Miles, have the Feds cut the rates? Apparently, it's going to be 25 basis points. Is what the Fed rate cut is going to be. But then again, it is also based on, not much essentially in terms of data due to the government shutdown still. Glad it got sorted. Yes, me too. Hello, Miles T. Good to see you. How you doing? How you been? Okay, let's do intro, disclaimer, what we're going to talk about on tonight's live essentially, and then we'll go straight back into the comment section and then back into essentially the first news on tonight's live. Welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Mouse Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. long time onwards for the most recent news regarding cryptocurrency, CBDCs, AI, politics, and regulations. Pretty much vital information for you to know about regarding the world completely transforming into a digital space. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And also, we do essentially Q&As on this live as well, which means if you do have any questions, put it down in the comment section. More than happy to help you out. And this is episode 396 of the CMF Live. And on tonight's episode, we're going to be talking about the Fed, essentially what was discussed, what could potentially be heading towards the crypto space or even the stock market. We're also going to be talking about some prospective news coming from CEOs, high-profile CEOs on the market space as well. Some essentially banking news as relative to the crypto sector as well, some partnership news announcements to go through, and some other essential news, and obviously Ripple news to go through on tonight's live as well, as always, as we do. Now, before we go through the first news, which is regarding Jerome Powell, let's go inside the comment section first. Hi, Miles. Good to see you, Michael. Good to see you. How you doing? How you been? Funky Brother says, has the idiot Jerome Powell come out and gave a stupid speech? Yes, he has. As always, Jerome Powell comes out and essentially ruins the entire market space and then goes home, which is exactly what he's done again this time around. Now, Jerome Powell is obviously basing his analysis on, not having enough data. We're in a government shutdown situation. Job loss records are going up. Could also have some relevance to the government shutdown situation where the Democrats are still not voting, these 6 votes that we need to pass through. But here's the first news relative to Jerome Powell. Bitcoin faces uncertainty after Jerome Powell's comments on interest rates. Bitcoin, the foremost digital currency, currently finds itself in a delicate spot amidst the recent essential remarks from influential figures inside the financial realm. Market reactions have been essentially swift, with investors closely analyzing potential implications for digital assets. The leading cryptocurrency has always been known for its volatility, yet recent market dynamics are further essentially influenced by voices that have the impact essential on economics and monetary policies, Jerome Powell. Given the current state of affairs, Bitcoin's future trajectory remains uncertain, apparently. The Federal Reserve Chair, Jerome Powell, made statements today regarding interest rates and the potential future trajectory going forward and creating a ripple effect across financial markets. The stock market today was actually doing pretty damn well. So was crypto until Jerome Powell decided to open his mouth, and then everything started going sideways and downhill. Jerome Powell indicated essentially that interest rates may remain elevated to combat inflation and stabilize the economy. These revelations have sparked conversations about possible outcomes in the tightened, essentially, financial environments. His approach underscores the need to assess not only the current economic climate, but also essentially the projected economic variables. Investors in Bitcoin and other digital currencies are essentially evaluating their strategies in the light of Jerome Powell's recent statements today. The idea of prolonged higher interest rates introduces a sense of caution in the cryptocurrency sector. Cryptocurrencies are always being seen as the riskier assets, and with Jerome Powell's speech today made them even more riskier. Market participants are weighing options as essentially reassessing their risk inside the market space, which might influence Bitcoin's price movements in the short term. Obviously, the long-term trajectory of the crypto space is obviously still, going to be an absolutely amazing ride going forward. The short-term period of Jerome Powell's speech is also going to ruin the market space, as it always does, which might influence Bitcoin's price movements. Recent trends indicate that the larger macroeconomic essentially factors may continue to bear heavily on digital current markets. Bitcoin's trajectory remains ambiguous as it contends with external essentially economic variables right now. Despite recent pressures, many essentially prominents argue that the cryptocurrency possesses long-term value as decentralized asset. It also highlights its resilience, noting that while external influences can cause fluctuations, the fundamental technology remains robust. Bitcoin supporters emphasize the cryptocurrency's role as a hedge against traditional economic systems. Yet, in this type of scenario, it didn't really do well for itself. Bitcoin remains a force of decentralization, offering an alternative to traditional finance, explained essentially by industry experts. They poised that while short-term disruptions are essentially likely, the overreaching narrative surrounding cryptocurrencies remains absolutely positive. I agree 100%. The overrounding essentially narrative regarding cryptocurrencies 100% is positive going forward. Short-term, we're going to be having these types of scenarios. Furthermore, some industry stakeholders have pointed out to the adoption of Bitcoin in various sectors, which might stabilize its market position. Businesses and individuals, investors are essentially alike, are steadily incorporating Bitcoin, indicating that its appeal is broadening despite current essentially uncertainties. Adoption continues to grow, reflecting confidence inside the technology. A market analysis essentially is sorted on that matter. Such sentiments fuel engagement, even in challenging financial conditions in the current economic landscape. Bitcoin's relative essentially stability is a subject of scrutiny, given the ongoing deliberations about fiscal policies and monetary essentially constraints. Bitcoin might experience continued fluctuations, and investors should remain vigilant as macroeconomic dynamics could significantly influence cryptocurrency markets. However, Bitcoin's essentially inherent resilience and decentralized nature can offer potential security and stability in turbulent times. Unfortunately, in turbulent times, the way Bitcoin is supposed to react, it obviously never reacts like that in any sort of way. As I have said previously, if we have any wars starting tomorrow morning, the first essentially asset to be tumbling downhill would be Bitcoin, and the first asset to be going skyrocketing up would be essentially gold, because it's a real safe haven essentially. Look, we're going to have scenarios of this where Jerome Powell comes out, opens his mouth, and ruins the entire market space and essentially goes back home. These scenarios are always going to be happening. Obviously, Jerome Powell's term is coming to an end, which is a brilliant, essentially, news for us. And we talked about this, essentially, not on yesterday, but the previous day. We talked about the 5, essentially, people that could be on the verge of replacing, essentially, Jerome Powell. And they're all pro-crypto, to be fairly honest. So Jerome Powell is coming to an end, which is a great thing. Now, it all boils down to essentially regulations. The faster, as I said, we get regulations, the faster we can decouple from Bitcoin's footsteps and go into utility. And that's when things start looking interesting, because then people see the real potential of cryptocurrencies, not just buy, sell, buy, sell. For example, today in the futures market space, about roughly $284 million in futures crypto market spaces were wiped out completely clean due to Jerome Powell coming out and saying good evening. The entire market got wiped out just by him saying those exact words or something similar to that. But again, look, if we get regulations, all of this fluctuation of us following Bitcoin's footsteps completely goes away, because utility is going to be a great thing inside the crypto space. And as we know, they are having discussions regarding the Clarity Act behind the scenes, even during the government shutdown, which is brilliant. And the hint that they gave that we could see a regulation passed even during a government shutdown was even better, essentially, on Monday's live show that we discussed. Now, moving on from Jerome Powell's ridiculous speech and short-term volatility inside the market space to Michael Saylor, the biggest Bitcoin advocate on the entire planet, even bigger than Satoshi Nakamoto, the creator of Bitcoin. Big Bull Michael Saylor reveals year-end Bitcoin price prediction, long-term, $20 million per Bitcoin. Strategy founder Michael Saylor made an essentially ambitious year-end prediction for Bitcoin's BTC price in an interview with CNBC World, essentially at the Money 2020 conference, predicting that Bitcoin could reach the $150,000 level essentially by year's end. Saylor based his optimistic essentially forecast on increasing institutional adoption, a positive regulatory environment, and the company's innovative digital credit instruments, explaining his expectations for Bitcoin. Saylor also said, our current expectation is that it should be around $150,000 by the year of essentially by the year end, given the current market dynamics and institutional structure. Now, the previous price that was set for Bitcoin was 250,000, but now they're looking at 150,000. Rate decisions continues crucial details in the medium term. He thinks that Bitcoin will move towards essentially $1 million in the next 4 to 8 years. Long term, Saylor believes that Bitcoin could be heading towards, per one Bitcoin, $20 million. Saylor, speaking at the Strategy New Digital Credit Instruments, Strike, essentially Strive and Stride, and Stretch, stated that these products offer investors options suited to different risk tolerances. And Saylor argued that because dividends essentially are financed through equity sales, capital returns, in other words, they are not taxed, which could increase the tax equivalent yield to between 16% and 20%. So those are Michael Saylor's recent remarks regarding Bitcoin's footsteps. Straight after the Jerome Powell speech, Michael Saylor comes out and goes, don't worry, Bitcoin will be $20 million per Bitcoin one day. Just to give that confidence towards the Bitcoin maxis inside the crypto space that this is just short-term volatility and we're still heading towards $20 million per Bitcoin. By the end of the year, they're expecting $150,000 Bitcoins. Look, anything's possible inside the crypto space. $150,000 per Bitcoin by the end of the year is not that far-fetched, to be fairly honest. $20 million is an interesting number. Now, investment bank Mizu is what we're going to talk about next. But before we talk about that, let's go inside the comment section first. As I previously, this is live, which means if you do have any questions or comments, put it down in the comment section. I'm more than happy to help you out. Also, just want to take a few seconds to say thank you so much to everybody who has straight away liked and retweeted this live. If you haven't seen my friend, smash the like buttons and smash the retweet buttons if you're watching this on X, and drop a comment outside the live. Also, if you're watching this on YouTube, thank you so much also for smashing the like button. If you haven't, drop a like and drop a comment outside the live as well. It's the only thing I ask for in return when I do these live shows. I don't ask for anything else except likes and retweets. Now, let's go inside the comment section first before we go through the next news on tonight's live. Jerome Powell is at home now sipping on scotch on the rocks while ruining essentially America, and JP, and also that you share the same initials as he does. Evening, Miles and fam. Susie, good to see you as well. How you doing? Hello, Miles and CMF members. Good to see you as well. Scott, how you doing? Sorry, I'm just checking in. Let's go, Scott. How you doing, brother? How you been? Now, the next news on tonight's live. Investment bank Mizu says that Visa is becoming the stablecoin of stablecoins. Visa's growing stablecoin network positions it as the key infrastructure player in blockchain payments. While individual tokens risk becoming essentially commoditized assets, Japanese investment bank Mizu, called Visa, the stablecoin of stablecoins, arguing that the payments giant has become a core part of the global stablecoin infrastructure. Visa's expanding network of stablecoin-linked card programs, now over essentially 130 in more than 40 countries, with spending essentially up fourfold year on year, gives it a central role in blockchain-based payments, according to essentially a report that came out today from Mizu Bank out of Japan. Stablecoins are cryptocurrencies whose value is tied to US dollars. Everybody's very essentially familiar with that inside of cryptocurrencies space. If you're not, essentially it's just pegged to the US dollars depending on what the currency is. If it's essentially a yen, then it's pegged to the yen. If it's essentially a euro, then it's pegged to the euro. If the dollar is pegged to the dollar, and so on. The bank has outperformed rating on essentially Visa shares with essentially $425 price target. The stock was essentially 1% lower, around $343.30 at publication time. Visa could essentially emerge as one of the biggest beneficiaries of stablecoin adoptions, helped by essential momentum from the Genius Act and this long-running essentially Visa Direct initiative. Analysts essentially Dan and Alexandra essentially wrote, Visa's Direct has grown about 50% annually since 2016 and now accounts for roughly 15% to 20% of the global debit volume, or over $1.1 trillion, they said. With a growing area of stablecoins from USDT and USDC, RLUSD, to PayPal's essentially PYUSD, of all the offerings out there, various central bank projects, and analysis said a centralized hub like Visa offers a powerful competitive advantage. Just want to point out one thing regarding this whole Visa and MasterCard situation. Right now, essentially right now, Visa and MasterCard sure seem like the better options to spend your cryptocurrencies. If people want to spend their cryptocurrencies on a daily basis, if you want to make some purchases for groceries or pay your bills and so on, sure, it makes sense to have an Uphold card, or essentially a Crypto.com bank card, or a Binance card, or so on. And they're all based mostly around MasterCard and Visa, but you get the picture. However, when we move forward more inside of this digital world, it's just going to be scanning QR codes, and it's going to be wallet-to-wallet transactions, which means that would you really need a Visa or a MasterCard to make transactions when everything's going to go towards QR codes? Because it is something also that was discussed between Larry Fink and Jamie Dimon at a roundtable, essentially, when they were discussing the future of essentially the digital future that we're heading towards. And Jamie Dimon made the comments regarding, Visa and MasterCard's future does seem quite dimmed going ahead, because we are going to be going towards QR scanning codes. So let's just say if you want to make a purchase in the future, you just scan a QR code, wallet-to-wallet transaction with the merchant, no matter what you're trying to buy. You don't really need a Visa or a MasterCard bank account, or essentially a bank card, in other words. The analyst also pointed to Visa's move to let banks mint and burn their own stablecoins using its tokenized asset platform, suggesting that individual stablecoins such as USDC are becoming interchangeable, and that the networks like Visa and MasterCard will ultimately capture the most amount of value. Visa currently essentially supports 4 stablecoins on its platform: USDG, PYUSD, EURC, and USDC. Mizu essentially said, and it's essentially only in the beginning. As stablecoins become more essentially commoditized, the bank sees Visa's role as the network of networks, or stablecoins of stablecoins, as key long-term growth drivers. The bank's analysis also retreated its view that Circle's USDC essentially is overvalued, maintaining an underperformed rating at an average essentially price of $84 per price target. Also, another thing regarding Visa and MasterCard is that genuinely their future is absolutely dimmed, honestly, because if you go into essentially a scan, QR code type of scenario, look, the EU mentioned one thing also. The EU, about 6 months back, came out and said, even 4 months back, they came out and said that they're tired of American corporations taking advantage of the EU regarding their payment systems like Visa and MasterCard. The cut that Visa and MasterCard take home is in the billions. And the EU said, if we can create an alternative to Visa and MasterCard in the EU, which would be cryptocurrencies or stablecoin in that sense, then we can cut out the middleman, and the EU could benefit from the amount of money that Visa and MasterCard bring towards the table. So that's another reason why Visa and MasterCard's future isn't looking too bright, as some may suggest it is. But even according to Jamie Dimon, it's really not essentially being seen as a bright future ahead of themselves in any sort of a way. Because in the future, it's going to be scanning QR codes. The EU doesn't want Visa and MasterCard's dominance anymore either. Neither does the Asian countries, to be fairly honest as well. A lot of these Asian countries and the Middle Eastern countries. So that's why it does seem that it might have a dimmed future ahead of itself. But on the topic of MasterCard, they are still trying to become relevant. MasterCard and Visa are both trying to become relevant in this future that we're heading towards. For example, MasterCard has decided to take a page out of Ripple's book and expand and essentially buy out companies, make acquisitions. MasterCard in talks to acquire a crypto infrastructure firm, Zero Hash, for up to $2 billion to stay relative in this essentially sense of a digital future. MasterCard is reportedly in advanced negotiations to acquire Zero Hash, a Chicago-based crypto and stablecoin infrastructure startup, in a deal valued at between $1.5 billion to $2 billion, according to a report that just come out from essentially retainers and Fortune. While the deal has not yet been finalized and could still fall essentially through, insiders suggest discussions are essentially at late stages, potentially marking one of MasterCard's biggest plays yet inside the digital asset space. Zero Hash provides the underlying infrastructure that allows banks, brokerages, and fintech platforms to integrate digital essentially asset functionalities such as crypto trading, custody, and tokenized settlements without having to build those systems in-house. The startup last essentially valued at $1 billion in September 2025 and has become a key player in the back end of crypto finance, serving as a white label provider for major financial platforms. If completed, the deal would give MasterCard direct control over infrastructure supporting stablecoins and tokenized essentially payments, both to central essentially to the company's next generation of payment strategies. For MasterCard, this move essentially continues a steady expansion into the crypto over the past 4 years. In 2021, the company acquired essentially CipherTrace, a blockchain analytics firm used for compliance and transactions and monitoring. In 2023 and between 2023 and 2025, MasterCard developed its own blockchain interoperability standards, partnered with Robinhood and other firms to create a stablecoin and launch pilots for the chain settlements with banks. Acquiring Zero essentially Hash would give MasterCard the technical backbone to process, settle, and tokenize transactions directly on the blockchain rails, moving beyond partnerships towards vertical integrations. The potential of Zero Hash deal follows a surge of acquisitions in the crypto infrastructure space as traditional payment giants and exchanges race to secure talent and technology. MasterCard reportedly competed essentially with Coinbase early this year as well in the bidding for a UK-based stablecoin startup named BVNK, though Coinbase ultimately outpaced them in the valuation. This time, MasterCard essentially appears determined to secure a foothold in the institutional-grade settlements of tokenization layers that Zero Hash tends to provide. MasterCard is, as I said, MasterCard and Visa are trying their best to be still relative in a digital world, even though a digital world means no more middleman. But MasterCard and Visa still want to become your middleman in a digital world and still get their cut in the middle of every transaction from the merchants. But if a merchant accepts wallet-to-wallet transactions, his fees will pretty much be minuscule. The best, simplest example I could give to everyone is when you go to a shop, a family-owned business, let's just say, if it's a cafe, if it's a restaurant, a family-owned business, for example, and you go to spend using your bank card, and in some cases they say, in the UK, for example, they don't accept American Express, or they don't accept certain banks. That's due to the payment systems that they're using that essentially take a cut of 1.47% to even some where it's 1.70% on every transaction the merchant is losing. But if that merchant decides to use QR codes, wallet-to-wallet transactions, he's cutting Visa, MasterCard, WorldPay, Square out. And it's just going to be wallet-to-wallet transactions, and essentially the store, the family-owned business, the family-owned cafe or restaurant or bar or whatever, they can take that money that they get from every transaction and put it in their own pockets instead of giving it to Visa or MasterCard or American Express or Square or essentially WorldPay. You get the picture. And that's why not only essentially the EU is trying to cut out Visa and MasterCard from their dominance play, but so are the rest of the countries slowly coming to the conclusion of we don't need them anymore. And so are businesses. So no matter how much they try to be relevant, what's the point? Because if businesses have an alternative way of not paying 1.40% on every transaction, then what's the point? Now, securities rolls out tokenized credit funds with BNY on Ethereum. Before we talk about that, let's go inside the comment section first, and then we'll go straight into the next news on tonight's live. Let's see where we're at. Let's see, we were here. Nope, we're here. Hi, when Boron, I was waiting long. Johnny, give it a little bit more time. Consider variable change. Any ACH news? Not much ACH news going on. Good evening, Miles. How are you, brother? I'm doing great. Cali, good to see you. How you doing? Hi, Miles and CMF Comatose, good to see you. How you doing? ACH is a flop. Johnny, ACH isn't a flop. It's just we don't have the correct regulations. So for a project like ACH to be able to do what it's supposed to do, which is the amount of utility it brings towards the table for on-ramps and off-ramps. Regulations comes through. We're going to get a lot of crypto projects doing a lot more better than they should be. Hi, Miles and family. Alex, good to see you. How you doing? How you been? It seems like the Pelosi are going to be cut out of luck once Visa fades away. Yes, they definitely are, 100%. Hi, Miles, the CMF Stormy, good to see you. How you doing? Well, the Peloskis have made too much money over the years, so they should be cut out. Now, securities rolls out tokenized credit funds with BNY and essentially it's on Ethereum. The fund offers exposure to categorized loan obligations with on-chain capital allocators, Grove, planning a $100 million anchor investment. Tokenization is a massive deal for essentially corporations right now. Banks love tokenizations, institutions love tokenization. It is a massive deal for them right now. Tokenization specialist securities rolled out the tokenized credit fund with $57 trillion financial service giant BNY as appetite for real-world assets, and is quickly growing. The securities tokenized AAA CLO fund, the STAC ticker, available essentially on Ethereum's network, aims to offer on-chain investors exposures to categorized loans, obligations, CLOs, according to a press release essentially today as well. BNY will act as the custodian for the fund's essentially assets, while investments essentially managements will be handled by Insight's BNY subsidiary focused on fixed income and structured credit strategies. What BNB is bringing towards the table is brilliant in my point of view, because every other institution out there decided to create some sort of a stable coin for themselves, which is now just becoming a novelty item. Everybody's just creating a stable coin, which is absolutely useless, to be fairly honest. Not that stable coins are useless, stable coins are brilliant, but the idea of every institution on planet Earth deciding to create a stable coin, then it will become a novelty item and create just massive confusion. But BNY Mellon deciding to just be on the sidelines, provide custody services, security services, and so on, so many other services towards the crypto sector. I think, in my point of view, BNY Mellon understands where this future is heading towards, and it's not about everybody creating a stablecoin. Grove, the on-chain credit-focused capital allocator of DeFi protocol Sky, plans to place $100 million into the fund as an anchor investment, according to the release. The offering aims to bring one of the most stable credit products onto essentially blockchain rails as demand for tokenized assets accelerates. BCG and Ripple projected that the tokenized real-world assets market could reach $18.9 trillion by 2033, up from $35 billion currently. CLOs bundle corporate loans into essentially treasuries of varying essentially risk levels. AAA rated trenches, the most secure, offer essentially floating rate exposure that typically appeals to institutional investors. Historically, these investments have been difficult to essentially access or slow to settle essentially. Tokenizing these fund shares could change that by enabling faster settlements, improved essentially distribution, and easier fractional essentially ownership. For clients who are searching for yield tokenizations, it is a great way to improve access to high quality credits and efficient and transparent instruments also, said Joes, the global head of BNY Investments and Wealth. Securities has issued roughly about $4.5 billion of tokenized essentially assets, such as equities and funds, including BlackRock's tokenized money market fund, Built. The company filed essentially plans this week to go public by merging with Cantor Fitzgerald Spec at the $1.25 billion valuation, aiming to become the first US-listed end-to-end tokenization firm. To be fairly honest, a lot of companies are essentially aiming to become the first tokenization company out there. Tokenization is becoming a very competitive, essentially, market space for crypto companies and for the institutions that are all involved. The idea that they're going to become number one is absolutely ludicrous because there's so many tokenization firms out there. But the idea that they could become one of the best, sure, it's out there. Now, Germany is what we're going to talk about next. And what Germany is thinking about doing could make Michael Saylor incredibly happy. Germany's alternative for Germany, the AfD, proposes a Bitcoin reserve. The party has proposed a motion for strict Bitcoin reserves in the Bundestag, essentially potentially making Germany the first major European country to consider Bitcoin as a sovereign asset. The motion signifies a strict shift, highlighting Bitcoin's role in monetary sovereignty, sparking widespread discussions, but essentially pending parliamentary approval for tangible influence on market and state policies. The proposal essentially is driven by the AfD, Germany's second largest political party, known for its essentially physical right wing, is what they're essentially saying. It advocates for German state to hold Bitcoin alongside gold and foreign essentially reserves, citing the cryptocurrency's decentralized nature and limited supply. Mario, the crypto CEO, the essentially crypto KOL, said the AfD motion calls for Germany's state to hold Bitcoin alongside gold and foreign reserves, citing Bitcoin's decentralized nature and limited supply as a strict essential advantages. Immediate effects sparked discussions within the crypto community, though no inflows have been essentially detected in government holdings yet. This proposal essentially emphasizes protecting individual freedom from essentially offering state-free money in contrast to digital euros centralization. This legislative proposal could reshape Germany's financial landscape, aligning with essentially other global reserves. AfD suggests acquiring up to 420,000 Bitcoins is what they're suggesting they should be holding, influenced by similar strategies from France, which we're going to talk about next, underscoring Bitcoin's legitimacy in sovereign potential portfolios. Market reactions remain speculative depending on parliamentary approvals. The proposal highlights missed opportunities from previous Bitcoin sales. What that referring to is that Germany used to have a tremendous amount of Bitcoin, not because they purchased it, but because they seized it. And then somebody who was in charge decided to sell it in Germany, obviously with some approvals to sell the asset. But Germany took a massive, massive loss when they sold their Bitcoins when they did. Because if they sold them now, they could have paid off Germany's debt if they wanted to. But then the moron decided to sell it too soon. The motion could drive regulatory essential renovations, positioning Bitcoin's district essentially from other tokens. Expert analysis anticipate changes in regulatory frameworks, potentially increasing Bitcoin's appeal as a reserve asset. Is this going to happen? Look, let me read you the French version of this as well, because it's not just Germany's second biggest political party that's suggesting we should be doing a Bitcoin reserve. It's also France that's thinking about doing the same thing. The French essentially are proposing a $48 billion Bitcoin reserve plan for national holdings. French lawmakers have introduced a bill to acquire 420,000 Bitcoins, also worth about $48 billion for the country's national reserves. The proposal represents 2% of Bitcoin's total supply and would make France the first European nation to establish a Bitcoin strict reserve if approved. The legislation submitted to the National Assembly by Union of the Right and Center essentially leader Eric outlines a 7 to 8 year acquisition plan designed to strengthen France's financial sovereignty through diversification. Now, France's economy is not doing too well. Genuinely not doing too well. Their real estate market space is, in absolute shambles right now, and they are struggling. Where they're going to be planning on squeezing out $48 billion is going to be the interesting factor. The proposal establishes a public administrative body to manage the Bitcoin holdings. Supporters describe the initiative as building France's national digital gold, they're calling it, intended to diversify foreign reserves and reduce exposure to current volatility. According to essentially Situ, the goal is to position France as a leader in the adoption of digital assets while maintaining long-term monetary stability to fund the Bitcoin accumulation. The bill also outlines several channels. One source would involve public Bitcoin mining operations powered by surplus nuclear, essentially, and hydroelectric energy as well. This model aims to make the process sustainable and support France's energy industry as well. The proposal also suggests the state retain Bitcoin seized in judicial proceedings instead of auctioning it, essentially gradually adding to the reserves. Lawmakers further proposed allocating part of the funds from Livret A and LDDS savings accounts to daily Bitcoin purchases on the open market. The allocation would equal to about 15 million euros per day they're going to be spending, or roughly 55,000 BTC annually France is planning on buying. The bill also mentions the possibility of allowing tax payments in Bitcoin pending constitutional review. According to the Big Whale's co-founder Gregory, the measure represents France's most comprehensive attempt to integrate Bitcoin into the state policy. Alexandra, the director of Bitcoin strategy at the blockchain group, said the proposal supports financial sovereignty, though essentially Bitcoin's holdings and state-backed mining using clean energy sources also. France isn't only trying to purchase Bitcoin, they're also trying to mine Bitcoin as well. The draft extends beyond Bitcoin's acquisition. It also recognizes euro-backed stablecoins as the valid payment instrument and proposes exempting small crypto transactions under $200 per day from taxes and social contributions. That is a step forward, finally. It should be a bigger step forward for France, to be honest, because so anybody spending 200 euros per day in crypto essentially wouldn't be taxed in France. Before, France was thinking about taxing anybody holding cryptocurrencies, even if they don't sell it. That was mainly because France was desperate for money. Additionally, it calls on the European Union to ease MiC essential restrictions on stablecoins issuance and raises concerns that a digital euro could centralize monetary control. Despite limited backing, the UDR holds only 16 seats. The proposal shows France's growing interest in cryptocurrency policies, according to the industry sources, and it places France essentially among the few major economies publicly considering Bitcoin as a part of their sovereignty reserve strategy. So the question remains, is Germany's essentially party, second biggest party, and is France able to pass this law? Can Germany and France create a Bitcoin reserve for their nations? The straightforward answer would be probably no. Mainly due to essentially Christian Lagarde, the European Central Bank head, who, when Bulgaria decided to create a Bitcoin reserve, if I'm not mistaken, Bulgaria wanted to just hold roughly about $2 to $10 million over Bitcoin starting out. It was instantly rejected by essentially the European Central Bank and said, nope, you're not doing that in any sort of a way. So the idea that France and Germany can get away with $48 billion each in Bitcoin reserves for their nations, well, if Bulgaria got rejected for $2 million in Bitcoin, what's the hope in hell is left for Germany and France to be able to purchase $48 billion each in Bitcoin? So that's where it essentially all lies in. So it's not just me, just coming out and saying, no, it's not possible in any sort of way. It's just what happened beforehand where Bulgaria got rejected straight away. It was only going to be $2 to $10 million, roughly. And they got rejected straight away. So what's the chance of Germany and France being able to purchase $48 billion? Pretty much none, by the looks of it. And people are trying to remove Christian Lagarde as the head of the European Central Bank. There are people voting against her now. Are they going to win? Probably not. I'll be very honest as well. Because Christian Lagarde wasn't elected by the people. And when somebody's not elected by the people, it's very difficult to remove them from their position. And if someone is elected by the people, it's also still difficult to remove them from their positions. But imagine someone who wasn't elected by you. I'll give you an example. Jerome Powell. Nobody voted for Jerome Powell. Yet he is the Fed chairman. And he's an absolute moron. And we can't remove him. Same goes with Christian Lagarde. Nobody voted for her. Nobody's going to be able to remove her. Even though there are people voting against her inside the parliament, not the retail section, they still can't remove her. Because when we vote for someone, we can't remove them. It's quite difficult. And when we don't vote for someone and just get elected somehow, they're never removing from their seats. Now, it's just the world we live in. Truth Socials is what we're going to talk about next on tonight's live. But before we talk about Truth Socials, let's go inside the comment section first. Let's see what's happening there. But I still love the idea that Germany and France are very passionate about bringing crypto infrastructure into their countries. Now, you could say the German party is only doing it to get votes in, but Trump did the exact same thing. But Trump came through. Trump said, he's going to, bring crypto into the United States, bring innovation, and he has so far promised and done everything he said for the crypto sector so far. Let's just be honest with ourselves. Trump said he's going to create some sort of a, crypto treasury, which the executive order was done. He said they're going to create crypto regulations, which we have the Genius Act now for stablecoins. Next is the Clarity Act. He said he's going to remove Gary Gensler, which Gary Gensler said he'll remove himself if Trump becomes president overnight, which he did. He said the CFTC will become pro-crypto, which they have. The Trump administration is pro-crypto. The OCC is pro-crypto because of Trump's administration and Trump himself. The FDIC is also pro-crypto as well. Fed members are getting replaced one by one to become pro-crypto as well. So I'll be honest, Trump is the only politician I've ever seen in my entire lifetime to say something and actually provide it, actually do it. So is the German party, if they get the votes in, actually going to do it is also the question. But then again, the EU is under the power of the European Central Bank. So that's another factor that plays in. And some people might not like me saying positive things about Trump, but get over it. Life is tough. Get used to it. There's a reason why I say the truth hurts. This isn't towards anyone in any sort of a way, but, if somebody is out there, he has done quite a lot for the crypto space, to be fairly honest. No doubt about that. That's just factual. Let's go to the comment section before we do get essentially the next news on tonight's live. It seems like, we were here. Hi, Miles and CMF. Much love. Christopher, good to see you as well. How you doing, brother? How you been? Greetings, Miles and CMF. Ray, good to see you as well. How you doing? How you been? Share the live. Let's go, Scott. Absolute facts. Ray, all facts. Let's go, brother. Now, on the topic of Trump, Truth Socials. Truth Socials launches new prediction market with crypto.com. Now, there was some news about this yesterday, but we have a bit more information to go through on today's live. Truth Social, the social media platform owned by essentially Trump Media and Technology Group, is expanding into the blockchain-based prediction markets right now. The company announced a new feature called Truth Predict, which lets users trade event predictions and contracts directly on the platform. Something very close to the poly market situation as well. Notably, this service will work through partnerships with Crypto.com, a leading cryptocurrency exchange. Truth Predict essentially will allow users to access CDNA, Crypto.com essentially derivatives in North America, a regulated platform for trading events-based contracts. The integration provides Truth Socials with a legal means to participate in prediction markets. It allows essentially them to bet on outcomes of major events, including political elections, sport results, and economic indicators. The essentially Trump family has expanded quite a lot inside the crypto sector, but then again, we're all benefiting from it anyways. If you're inside the crypto sector, you're benefiting from this whole Trump movement. Interestingly, essentially Truth Socials will be the first social media platform to offer its users technology to access the prediction markets through a CDNA. By utilizing essentially the infrastructure, Truth Socials aims to essentially combine social interactions with finance and new Web3 technology also. The partnership with Crypto.com ensures that transactions and wallet connections are safe, clear, and verified on the blockchain. And this partnership also blends social media with real-time market participants. And there is no doubt about the prediction markets also growing quickly with platforms like Kalensky or even Poly Market. So if you're somebody that, loves the idea of betting on politicians, for example, then, if you're somebody also that uses Poly Market, this could be another platform for you to be looking into, which is Truth Predicts. Moving on from that to BlackRock's CEO. BlackRock CEO, crypto and gold are assets of fear against inflation. So Larry Fink has a new perspective since he's done the roundtable. So Larry Fink, Jamie Dimon, and a few other essentially high-profile people inside the financial sector did a roundtable essentially, where they discussed the future of finance going forward inside the United States and on a global basis. And here's what Larry Fink has had to say. BlackRock CEO Larry Fink said, essentially, more people are buying crypto and gold because they are scared of losing money as government debts keep rising, which is a valid point. During a recent interview at the Future Investment Initiative, the FII conference in essentially Riyadh, Saudi Arabia, he explained that owning crypto assets or gold are assets of fear, he said, according to Bloomberg. You own these assets because you're frightened of the debasements of your assets. You're worried about your financial security. You're worried about your physical security. Fink's remarks come at a time when investors are showing interest in what experts call the debasement trade, meaning away from government money and buying hard assets such as gold, silver, and cryptocurrencies. In a statement, Fabian Dori, the chief investment officer at Siam Bank, explained that the trend is happening because of weakening purchase power caused by loose fiscal and monetary policies. There are good reasons why private investors, banks, and institutions may start to hedge using Bitcoin or other cryptocurrencies, he said. However, he warned that crypto's prices changes fast, so it needs better risk systems and needs to be monitored round the clock. According to data from the International Monetary Fund, the IMF, America's government debt will reach 143.4% of its total economy by 2030. That would be higher than the debt levels in Italy and Greece. The International Monetary Fund also says the US will keep a large yearly budget deficit above 7% of the GDP until 2030. This number has made lots of investors panic, and many are trying to protect their money from possible inflations and weaker currency values. According to Fink, the US still relies heavily on foreign investors to buy its treasury assets. We still are a nation that needs 30% to 35% of all our treasury sales going overseas, he said. Still, he added that money investors believe the US will remain the best place to invest for the next 18 months. According to Larry Fink, the CEO essentially of BlackRock, the biggest essentially company in terms of finance in the world, coming out and saying that the US is still going to be leading essentially the market spaces in the next 18 months to come. I agree 100%, even above 18 months, I would say. The US, in my opinion, will always remain the biggest market space for any investors, to be fairly honest. And it has essentially expanded quite a lot, even in this digital essentially world that we're heading towards. But from Larry Fink's comments of, people, you are worried about your financial security. You are worried about your physical security. That is why people are running towards gold, silver, and digital currencies. I agree, 100%. But also thinking about what Trump said at a conference, where he said, they could use crypto to get rid of the American debt and completely flatten it. And in Trump's words, he said, we could just maybe write it on a piece of paper and say, there we go, $35 trillion gone on crypto. And it is also something that Anton, Putin's advisor, said that the US might be trying to do, getting rid of their debts with digital payments, which then made China very essentially angry on that matter as well. But then again, we are having a China essentially and US talks happening today also, if I'm not mistaken. But anyways, according to Larry Fink, the US dollar is not going to be too strong, essentially beyond 18 months, and people are still running towards cryptocurrencies and even institutions or the global basis in general. I believe that 100%. But regarding the US dollar's weakening and people having no trust in it, I'll give you an example. China sells their US bonds. The UK picks it back up. China sells their US bonds. Japan picks it back up. China sells their US bonds. The EU countries pick it back up. Because they're allies. Also, the Genius Act that passed through for stablecoins, there was a reason why the Genius Act passed first for stablecoins in the US before the Clarity Act did. The reason why the Genius Act passed first, in their own words, of why they passed it first, is that the stablecoins, the US dollar stablecoins, are strengthening the US dollars. And what they mean by that is, Every time Tether prints USDT, every time Circle prints USDC, every time Ripple prints RLUSD, every time PayPal prints PYUSD, they're backing it with fiat US dollars, backing it with US bonds, treasuries, and so on, which strengthens the US dollars. That's the sorry about that. That's the reason they're passing, essentially. They pass the Genius Act first because it benefits the US dollars in the long term. So even in a digital world, the US dollars are still going to be essentially still going to be number one. Now, moving on from that, to Japanese giant processing $2 trillion in payments announces a new partnership. And it's a project that I like. AVAX. TIS, one of Japan's largest payment infrastructure providers, has launched a new blockchain essentially based multi-token essentially platform in collaboration with AVAX. Now, this is an update that's come out essentially yesterday, but there's more of an update that I'm going to share with you today because we have more on it. This system, called the multi-token essentially platform, was developed using AVAX's enterprise focused infrastructure solution, essentially AvaCloud. The platform aims to support the issuance of exchange and management of stablecoins and tokenized assets under Japan's Payment Service Act. Under this initiative, TIS plans to work with banks, private companies, and public institutes to promote global adoption of the platform. TIS owns the essentially Pay-Surge system, which handles half of Japan's credit card transactions and processes approximately 300 trillion, essentially yen, about $2 trillion in payments annually. The company moves to blockchain is seen essentially as a part of its strategy to transform traditional financial infrastructure with blockchain rather than disrupt it. Established financial institutions in Japan are turning to blockchain to upgrade their systems, not replace it. John Navis, the head of business development at Ava Labs, said in a statement, the new platform is designed to meet the strengths, essentially security and performance standards of the Japanese financial industries. With a capacity of 50,000 transactions per second with instant essentially settlements and features. AvaCloud CEO Nick stated that the project is successful. It could form the foundation of Japan's digital finance infrastructure, is what they're saying. The platform will support real-world time payments, embedded finance solutions, and in the future, central bank digital currency testings. We will work in collaboration with financial institutions, companies, and public institutions to promote the global adoption of the next generation financial infrastructure based in Japan, said the executive director of TIS. Now, this isn't the only Japanese company that processes over $2 trillion that's partnered with a blockchain firm. There's a few more out there. One of them is essentially SPI Holdings with Ripple, and essentially a few other companies out there that are partnered with even other blockchains as well. But what I'm interested mostly about, one, AVAX, brilliant job, great project. Two, the idea that AVAX is going into the, stumbling upon into CBDCs is interesting. Because for the longest time, Ripple has been the one running the show for CBDCs. And the crypto space was criticized. Well, the XRP haters and the Ripple haters have been criticizing Ripple in its footsteps of CBDC testings. Even though 98% of centralized banks are in CBDC stages. 98%. And that's according to the International Monetary Fund. But the entire crypto space ridiculed Ripple for being in CBDCs. Yet AVAX is now taking steps in CBDCs. Trust me, you'll be hearing news. Solana is next thinking about going into and testing the idea of CBDCs and so on. And once again, everybody will be standing behind Ripple, as they always do. Now, BlackRock is what we're going to be talking about next on tonight's live. BlackRock, Goldman Sachs, among 100 public participants in Circle's Arc public testnet launch. Before we talk about that, let's restart the comment section first. Let's see what's happening there. Then we go straight into the next news, which is BlackRock, Goldman Sachs, and 100 other plus companies. Let's see what's happening first inside the comment section. We were here. Did I miss any information on XRP, XLM, XDC, HBOT or HOT? No, but XRP is coming soon. 3 more news. Maybe we get ETF this week, is essentially what Messi is saying. If the government opens, sure, why not? The Democratic Party is really falling apart even further now. I mean, I saw what was happening. And so far, They've done 13 votes, and still the Democratic Party is not giving the votes to open the government back up. If Germany and France make BTC reserves, the entire EU should go the same path. I agree. If they are able to pass it through in some sort of a way. But there is also that fear factor that a lot of people are not realizing. Obviously, you know it because I've said it many times in this live show, but it's just something to be reminded of always, that the owner of Bitcoin, group, entity, CIA, or a random person, even though ironically 2008 was the biggest market financial crash, the banking crisis situation, real estate, and then 2009 straddles along Bitcoin. Interesting enough, the timing was very funny. But, you know, let's just say random person, entity, CIA operation, wherever it may be. Whoever was the one that created it holds a tremendous amount of Bitcoin. If countries start, and there's a reason why the Satoshi Nakamoto person or group or entity or CIA operation hasn't spent a single penny yet, because he's waiting for the perfect time. If every one of these countries starts adapting essentially Bitcoin into their treasuries, let's just say, then that means Satoshi Nakamoto's portfolio is just going to grow and grow and grow and grow. It's already sitting in the billions, hundreds of billions. It's going to grow even further if more are adapting to that. And then in one day, let's just say that wallet or those wallets from day one decide to see their bags on the crypto space. When certain countries are holding a certain amount, large amount, let's just say, or medium amount in Bitcoin, those countries will be impacted quite heavily bad. And let's not forget, these are countries that are struggling. They might look like powerful countries on paper. In reality, they're all struggling. Germany's economy is struggling. France's economy is struggling. Italy's economy is struggling. Spain is ironically doing better than the rest. The rest of the Europe, I mean, put together, they're all struggling together. Because the only countries that are holding the EU together, let's just be honest with ourselves, is Germany, France, Italy, and Spain are the only countries holding the EU together. The rest don't really have money. Obviously, Monaco has money as well, but that's different because they're all just millionaires and billionaires that only care about themselves. Other than that, it's these four countries that are essentially running the show, and these four countries are doing horrendously bad. If they hold an asset where they don't know who the owner is, and that owner decides one day to open all those wallets and dump it on the market space, it could cripple their economies overnight. That's what the fear is. That is a big fear. And I've said this before, a simple scenario. If you walked into Wall Street, for example, in any Wall Street hedge fund firm you walked into today, and they put 2 to 3 assets in front of you, and they said, this one has, limited token supply, but we don't know who the owner is. And the owner owns a tremendous amount. This one, we know who the owner is. This is what the project is. This is what their partnerships are. This is what their contracts are, so on. Which one are you going to be choosing? It's a very simple question, to be fairly honest. If you were given the option, which one would you choose? The project that you don't know who the owner is, but he holds a tremendous amount of shares, let's just say, or the one that you know who the owner is, you know they're compliant, you know they're on the regulations, nothing could pretty much go wrong, compared to the other one where everything has to be a secret. I'll tell you what, every hedge fund would run the other way in reality, but for some reason, some don't. At this point, they're playing roulette. Now, BlackRock. But that is a big fear that every country should think about, honestly. Whoever created it could dump it one day and ruin economies overnight. BlackRock, Goldman Sachs, among 100 plus participants. And again, I'm not trying to bash on Bitcoin or bash on Bitcoin maxis, I could if I wanted to, but I'm not going to do that. I'll be the bigger person. I'm just stating the obvious. You don't know who created it. The person who created it has a tremendous amount, and that amount keeps on growing by the second, you could say, pretty much. And if countries start buying it and that person decides one day to dump it because there's a reason why he hasn't touched it all this time, or that entity or that CIA operation or whoever it may be. BlackRock, Goldman Sachs, among 100 participants in Circle's ARC public testnet launch. Circle Internet Group has rolled out a public testnet for its open layer 1 blockchain named network, essentially ARC. The press release essentially revealed that over 100 organizations spanning finance, businesses, and technology sectors have chosen to test the new network. Among the notable participants are tech firms such as Amazon Web Services, Anthropic, and essentially Cloudflare, as well essentially financial service firms including BlackRock, Deutsche Bank, Goldman Sachs, and Standard Chartered Bank. ARC Network, which was essentially first announced on essentially August 12th, is an essentially Ethereum virtual machine EVM compatible open blockchain that uses USDC as its native gas token. According to essentially the press release, it was designed to support predictable dollar-based fees, essentially second transactions finalities, opt-in essentially configurable privacy, and direct integration with Circle's full stacks platform. ARC was also designed to build, essentially to provide complete functionalities for stablecoins, gas fees, are also paid in USDC or other essentially stablecoins, and Circle intends to deploy native infrastructure on ARC to support core stablecoin swaps and FX liquidity. Something similar to off-ramps and on-ramps is essentially what this is essentially offering. 100 participants are right now looking into this idea of, is ARC viable? Is it a good idea? The testing and so on. But there are big names that are involved in this essentially testing, to be fairly honest. So let's just see how that goes. Now, David Schwartz is what we're going to talk about next. Something quite interesting came out of David Schwartz today. David Schwartz says 92 billion essentially dollars in XRP escrow can be sold before release. So Ripple's chief technology officer David Schwartz has confirmed that the company holds the legal right to sell or transfer future claims to XRP currently locked in escrow. So Ripple is able to sell the XRP inside of the escrow to whoever it may be. This means that Ripple can pre-sell the rights to tokens that will be released over time without altering the long-standing time lock mechanism first introduced in 2017. What that also means that if Ripple decides to sell the locked XRP to institutions, to a government, for example, they're not allowed to dump that portfolio on the market space because it still has to be released the way it's supposed to be released every month, which is a great idea. Because even if they do end up selling it, because it was planned to somewhere down the line to the US government, let's just say, for example, they can't dump it on the entire market space. It has to be released in its time slot. Ripple's escrow system was designed to provide transparency and predictability to XRP supply each month. Up to 1 billion XRP is released, and any unused portion is typically placed back into the escrow. The setup aimed to prevent market shock and reassure investors that Ripple would not suddenly flood the markets with tokens. Today, around 56 billion XRP are in circulation, while roughly 35 billion, essentially valued at around $92 million, remain locked in Ripple's escrow accounts. David Schwartz's statement clarifies that Ripple can sell the rights to these future tokens or even transfer the escrow accounts themselves. The XRP, however, cannot enter circulation until their scheduled release dates. In other words, again, whoever buys the escrow accounts of Ripple, if Ripple decides to sell them to a government or to an entity, they cannot dump all of it on the market space. It has to be still released in the same mechanism was set up in, which is monthly basis. This opens the door for Ripple to monetize its future holdings while maintaining compliance with the original escrow terms. It also allows institutions to secure guaranteed access to future XRP supplies under private agreements possibly governed by non-disclosure clauses. In other words, the NDAs that Ripple's been signing off about quite a tremendous amount of them, roughly about 1,600 to 1,800 NDAs are essentially out there due to the SEC case we found out. So those entities could have XRP, but they're not allowed to dump it on the market space due to the mechanism. It's all about a timeline. The revelation could mean a streak advantage for Ripple, By pre-selling or transferring rights to its escrowed XRP, the company can build long-term partnerships with institutional buyers, because the institutional buyers will be buying the XRP, but they can't touch it until its period is ended when it's released in circulation. Now, experts and supporters say this move could reshape perception of Ripple's control over XRP, because for the longest time, the XRP haters and the Ripple haters have been saying that Ripple's been controlling XRP, Ripple has too much control, it's like a corporation, it's not decentralized, and so on and so on. But now that people are finding out, even the XRP haters are finding out that Ripple can technically sell the XRP escrow to an entity, to a government, to an institution, to whoever it may be, then it's not really as how they thought it was. And that they can't dump it on the market either, just before any XRP haters come out and say, Ripple's going to sell their escrow and they're going to dump it on the market. No, they're not. But if those rights are already distributed or optioned to multiple institutions, the narrative of Ripple being the sole control of XRP may lose ground. That's another valid point. Of all the NDAs that Ripple has signed, essentially with all these corporations on a global basis, if those companies essentially right now holding their XRP technically in Ripple's escrow, then the idea that Ripple's controlling XRP and it's not decentralized, it's centralized and so on, pretty much fades away. So that whole argument that the Ripple haters had, the XRP haters had, goes away completely. Evernorth, a Ripple-backed entity, is also reportedly building the XRP treasury, which we talked about platform. Early data shows that it already holds $1 billion worth of XRP. This could be the first public example of an institution leveraging Ripple's escrow rights as a financial asset. That is tremendous news, to be fairly honest. The idea that Ripple's able to sell off their escrow to institutions or even to governments, and then not allowed to touch it until a certain time period when it gets released into circulation, so they're not dumping on the market either. And the idea that they already could be sold off, and that Ripple really isn't centralized. You know, the XRP ledger isn't really centralized because they could be sold off. We don't know. They could all be on their NDAs. But in general, Ripple isn't centralized. But in general, also the crypto space, the idea of living in a digital world and everything will be decentralized and freedom of speech is absolutely ludicrous, because we don't have any of that right now. We have pretend freedom and pretend freedom of speech. You know, I mean, well, there are certain things we can say and can't say online because we'll end up in essentially, you know, a massive fine or prison sentence or whatever. You actually have more freedom of speech in Russia online than you would do in the UK. More people in the UK got arrested because of what they said online than they did in Russia. That should just tell you, you know, the idea of freedom of speech or human rights doesn't really exist. It's just all an illusion. And the idea of going into a digital world, somehow you'll get your freedom and human rights, you know, even better, is just even more stupid. There's always going to be elements of centralization no matter what in this world, because we live under greedy, powerful people. There are other words I can say to describe the people that run the show, but those are the words I'm going to be using. Greedy, powerful people that run the show. So the idea of living in a freedom of speech, human rights type of world doesn't really exist. It's not going to be existing in a digital world either. There's always going to be elements of centralization in this world or the digital future that we're heading towards. But anyways, Ripple's Trust Bank is what we're going to talk about next. Now, inside of X today, there has been quite a lot of people coming out of the woodworks once again. And the people that are coming out of the woodworks are, you guessed it, the XRP haters. As usual, the XRP haters came out straight away when Western Union's news came out that Western Union is going to be creating a stablecoin on Solana's network. So the XRP haters decided to quickly make video and clickbait videos, content essentially, to come out and say, haha, told you, nobody's going to be using Ripple. Look, I'll make it very simple. The reason why Bitcoin maxis, Solana lovers, Chainlink lovers, Litecoin lovers, or any other crypto project out there, the reason why they always try to compare themselves to the XRP ledger or to XRP or to Ripple is because they're trying to compare themselves to the best. And some people might laugh at that and go, Ripple's not the best. What are you talking about? XRP's not the best. What are you talking about? Well, then why are you comparing yourself to it? Because nobody goes and compares themselves to the worst project. You don't see Chainlink comparing themselves to Draft Token, but you do see Chainlink people comparing themselves to the XRP ledger. You don't see Solana essentially comparing itself to Frog Token, but you do see Solana 24/7 comparing itself to the XRP ledger. You don't see Litecoin comparing itself to Camel Token, but you do see it comparing itself to the XRP ledger, because people will always compare themselves to the best. The best football team will compare themselves to the other best, essentially to the football team that's above them. Or the best, the Formula driver will always compare themselves to the best Formula driver out there. You get the picture. Nobody compares themselves to the worst. Everybody will compare themselves to the best essentially out there, which is the XRP ledger. That's the reason why the essentially the XRP ledger haters, the Bitcoin maxis, the Solana lovers, the Chainlink lovers, the Litecoin lovers, and all these other crypto groups out there, they always try to bash on XRP. They always try to bash on the XRP ledger. They always try to bash on Ripple, and they always compare themselves to us. But you don't see us comparing ourselves to their projects. We don't compare ourselves to Litecoin. We don't compare ourselves to Solana. We don't compare ourselves to Ethereum. We don't compare ourselves to Bitcoin. We don't compare ourselves to essentially any other blockchain out there, because we couldn't care less. In terms of finance, as I've said multiple and millions of times, there's no competition. Even though people will tell you there is competition when it comes inside the financial sector of Ripple and the XRP ledger and XRP, there's zero competition. Absolutely zero competition. We don't compare ourselves to them because we're already the best. But they compare themselves to us 24/7. That should tell you everything. Because people will only compare themselves to the best. But we don't compare ourselves to them because, well, who cares about them? Now, on the topic of Ripple, Ripple Trust Bank review is nearing finish, essentially boosting XRP's sentiment. Everybody remember, Ripple applied for a banking license, which means it doesn't really need third-party companies like Western Union or the rest of the shenanigans. Ripple's 120-day review period with the essentially OCC is set to conclude on October 30th. This marks a major milestone in its plan to establish the Ripple National Trust Bank. So the deadline is coming up. October 30th is essentially where the deadline is going to be for the essentially 120-day review period that the OCC had on Ripple. The development has sparked renowned optimism among XRP holders. Analysis suggests that the company's strong regulatory track record essentially could fast-track approvals. The OCC review process typically takes 6 months to a year, but Ripple's case appears different. According to the industry observers, the company's strict adherence to compliance standards and its progress with RLUSD, Ripple's recently launched stablecoin, may allow regulators to skip a few steps and go straight into approval stages. If true, Ripple could receive full authorization sooner than expected because the deadline is coming up, and it's coming up tomorrow. It is potentially streamlining its entry into formal banking operations. The move would allow Ripple to manage digital assets. It's potentially streamlining its entry into formal banking operations, and the move essentially would allow Ripple to manage digital assets and provide custodial services directly under the national banking license. This further integrates its blockchain solutions with US financial systems for the broader crypto community. This signals essentially that Ripple is continuing to move towards mainstream financial legitimacy at a time when regulatory clarity remains uncertain across the industry. While speculation often drives token prices in crypto markets, Ripple's ecosystem has built its reputation on utility and function, not hype. Analysts highlighted how XRP's value stems from organic demand essentially tied to real-world usage. Unlike some networks that see price surges from trend essentially based tokens, Ripple's growth is rooted in adoption. XRP serves two key purposes. It secures the network and acts as a bridge currency for cross-border payments. These functions ensure that XRP has consistent essential demand as Ripple network scales. Each Ripple account requires users to hold small amounts of XRP as a reserve to prevent the spam attack. Transaction fees are also paid in XRP, creating a steady burn rate that slightly reduces the total supply over time. With 100 billion XRP essentially tokens created, ever created and none to be added. It scarcely strengthens long-term value. This design underpins Ripple's claim that XRP demand grows naturally as more institutions adopt its payment protocol. It's a model that emphasizes sustained growth through functionalities rather than speculation. The approaching OCC decision has stirred essentially enthusiasm within the XRP community, and investors see the potential bank approval as a validation of Ripple's long-term strategy. To blend traditional finance with blockchain infrastructure, Ripple's leadership has consistently positioned the company as a bridge between two worlds. It is leveraging compliance first and innovation while promoting XRP as a tool for efficiency and liquidity in cross-border settlements. If Ripple's National Trust Bank receives approval, it would mark one of the biggest, essentially most significant regulatory milestones for any blockchain firm to date. It could also serve essentially as a model for how digital asset companies integrate with the global banking system responsibly. If Ripple's Trust Bank receives final approval, it could become a defining moment for the company and the XRP ecosystem. The move would enable Ripple to offer regulated digital asset services under federal law, a first for a company born in the essentially blockchain sector. For the XRP holders and the wider crypto community, the conclusion of the OCC review signals more than just a regulatory milestone. It reflects the growing institutional confidence in Ripple's technology and its ability to operate within traditional finance structures. As of essentially October 30th approaches, optimism continues to rise. Ripple's steady progress, it coupled with XRP's increasing world use, paints a promising picture for the project's future, one rooted not in hype, but in long-lasting value and global adoption. That is incredible news, but also we have to consider the fact that the Democrats still have not voted for the government to open back up. So the question will remain here is that, is the OCC also understaffed? Yes, we are coming up to the deadline for Ripple, essentially in terms of their banking charter license for their review period, the 120-day review period, essentially, which is tomorrow. That we might get something coming out of the OCC, and we might not, mainly due to that the OCC might also be understaffed, the same way the SEC is understaffed and the CFTC is understaffed, and the list just goes on. But the good news is the period has come to an end. So we're not that far off to the government maybe opening its doors and the Democrats coming to their senses to actually vote. So far, we had 13 votes, and every 13 times, the Democrats wasted everybody's time. It's like they honestly couldn't care less about the American people. The amount of jobs lost because of the Democrats not voting is ridiculous. And the Democrats come out and go, we stand for freedom. We stand for you, the American citizens. Then vote if you stand with the American citizens and open the government, Democrats. Because all you've done so far is made quite a lot of people jobless in America. On that note, we have also come to the endings of tonight's live. This was episode 396 of the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrencies, CBDCs, AI, politics, and regulations. Before we obviously do go, let's go to the comment section first. This was happening there. Then we go straight into the essentially calling it a night, in other words. Also, there's a question from Funky Brother Miles. We have to admit that it is very good news for Solana, also very good news for crypto markets. I'll be very honest, the Visa, MasterCard, Western Union, PayPal, all of these payment infrastructure firms will pretty much become obsolete once we go into QR codes. Honestly, Visa, MasterCard, Western Union, PayPal, or any other payment infrastructure out there that already exists, that are third-party companies, that are middleman companies for transactions, that are taking a cut every time a transaction is made, they will go obsolete. The moment we go into wallet-to-wallet QR scans, there's no point of Visa, there's no point of MasterCard, and there's no point of Western Union, there's no point of PayPal. They're all trying to still stay relevant. Who uses PayPal's stablecoin? Pretty much nobody. Going into a digital world, it's wallet-to-wallet QR code scanning. Visa, MasterCard, Western Union, PayPal, Stripe, WorldPay, all of these will slowly become obsolete because they're all middleman payment systems taking a cut. If I can send money from my wallet in the UK to a friend in Australia or a friend in Japan or a friend in Chicago or a friend in New York, why the hell would I need Western Union? If I can send a wallet-to-wallet transaction, why would I need PayPal? Why would I need MasterCard for groceries when I can scan a QR code? Why would I need Visa for groceries when I can scan a QR code? You see the picture. Wallet-to-wallet transactions will make quite a lot of payment companies, middleman payment companies, absolutely obsolete. And that's what Jamie Dimon was talking about at that roundtable in Saudi Arabia regarding the future of finance, where certain companies will become pretty much dimmed out. Keep that in your minds as well. Logically, would you really need PayPal to send money to your friend across the world if it's a wallet-to-wallet world, or Western Union, or Stripe, or WorldPay? Not really. It's wallet-to-wallet QR code scanning. Before we do go, let's get started the conversation again, obviously. Let's see what's happening. Okay, we were here. That's great feature to have. That reassures people that all the tokens non-escrow can't flood the markets. Yes, facts. Lina, good to see you as well. How you doing? How you been? Can you talk about Web3 security today? I have used Tangem and it's good enough for my XRP. Yes, Tangem is brilliant in my point of view in terms of a cold storage wallet. Absolutely amazing. No financial advice, obviously, but brilliant nonetheless. Regarding Web3 security, Scott, ask me any questions you want on DMs and I'll reply back to you straight away. Sorry if I haven't already. That's a great feature. We're going XRP. Yes, definitely not from the markets. It'll be crazy if all of a sudden all XRP is spokeful. Yes. Facts. Let's go. Shelly. Hi, Miles of CMF. Golden Dragon. Good to see you. How you doing? Good night, Miles, and all the CMF. Thank you for a great live and news, JP. Let's go. See you tomorrow sometime as usual. Great live, Miles. Thanks. Sleep well and see you tomorrow. Same time. Autistic, see you tomorrow sometime as usual as well. Great live, brother Miles. Comatose, see you tomorrow sometime as usual. Good night. Roman, see you tomorrow same time as usual as well. Great live, Miles. Thank you. Good night, Miles and CMF. Jason, see you tomorrow same time as usual as well. Thank you, Miles and CMF. See you tomorrow. Mike, see you tomorrow same time as usual as well. They can delay Ripple, but they cannot reject Ripple for long as the train has already left the station. Facts. Let's go, funky brother. Absolutely facts. Night, Miles and CMF. Pablo, see you tomorrow same time as usual as well. Great job, Miles. Scott, see you tomorrow at the same time as usual as well. Thank you very much, Miles. Have a great night. All see you tomorrow. Carlos, see you tomorrow same time as usual as well. Awesome show tonight. Hold on tight, CMF. Good night. Take care, all. Let's go, Ray. See you tomorrow at the same time as usual. See you tomorrow night at 10 p.m. at essentially 10 GMT. Funky brother, see you tomorrow same time as usual. Thank you, Miles. Good night, all. Stormy, see you tomorrow same time as usual as well. Great news. Many thanks. Night, all. Susie, see you tomorrow same time as usual as well. Good night, Miles and CMF. Thanks for great news. See you tomorrow. Free forever. See you tomorrow. Same time as usual. Thanks, Miles. Great live. See you all tomorrow. Shelly, see you tomorrow. Same time as usual as well. Thank you, Miles. Good night, all. Lena, see you tomorrow. Same time as usual. Good night, Miles. Callie, see you tomorrow. Same time as usual. CMF, thank you so much to every single one of you that tunes in every single night, puts a comment, retweets, likes, and just tunes into these live shows. Absolutely amazing. I love it when everyone tunes in. I will be seeing everybody tomorrow. Same timing as usual. And a disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. Tune in tomorrow for episode 397 of the CMF Live. Everyone have a great day or a good night, depending on where you're around the world. CMF, see you all tomorrow, same time as usual. Love you all, see you tomorrow. Like, comment, retweet, follow, subscribe if you already haven't. If you have, thank you so much. And if you follow and subscribe, welcome to the CMF. See you everybody tomorrow, same time as usual.